Hi guys, very good evening all of you. How are you? So I hope you're doing good, and today let us start with a new chapter. What is that chapter? Audit of items of financial statements. Okay, so is it there in the new syllabus? Yes. Is it there in the old syllabus? Yes. In old syllabus there are two chapters, chapter 6 and chapter 7. What are they? Vouching and verification. So that vouching and verification put together is nothing but audit of items of financial statements. So basically, in the old syllabus, how they have classified is P&L items will be there, no? Normally, examination of revenue, income items, examination of expenses, everything they'll teach in vouching. Okay, so what is vouching? Vouching refers to examination of transactions. Then in the next chapter, chapter number 6, 5 and 6, in chapter number 6, verification refers to examination of assets and liabilities, balances. So tests of balances is called verification, tests of transactions is called vouching. Now what they have done is, financial statements means both P&L and balance sheet will come now. So they have put one common word to both these chapters and they merged it into chapter 9. So here chapter 9 is audit of items of financial statements. So this is a very easy topic. Damn sure question will come from this area. But the problem to the student is, look at the size of this chapter, 114 pages. Oh my god, are you kidding me? 114 pages. So probably around 8 marks you will get this. You will get from this chapter. Okay, if 8 marks you are getting from a chapter, can you read 114 pages? For 8 marks, if it is 114 pages, proportionately, if you look at 114 divided by 8, that means you have to read 1425 papers to cover 100 marks syllabus. Don't you think it is huge? So the content is too big, too much of information. You should know how to trim it. You should know how to trim it. For example, say how do you verify share capital? If that is the question in the exam, one question has come, how do you verify share capital? You open ICA study material, 6 pages is there. 6 printed pages. If you write with your handwriting, it will become 15 to 20 pages. So that will be your 3 hours of exam. So can you write 6 printed pages? No. How do you verify property, plant and equipment? An item of property, plant and equipment. This is given, say for example, for 4 marks. Open ICI material, 5 pages is there. 4 pages is there. Even verification of cash balance they have given in 2 pages. Verification of sales kind of transactions, verification of employee benefit expenses, these will run into pages and pages, 2, 3, 4, 5, 6, and there is no end. How can you read that much of data? How can you process that much of data? How can you retain that much of data? How can you write that much of data? Even if you do the whole process, is it really worth writing that much in the exam? Can you write considering the time factor? The answer is no. The answer is no. So this is bad news. But the good news is, this particular chapter is there, no? Audit of items of financial statements. Remember, you do not need to reproduce verbatim as it is. Like, whatever is there in ICI study material, as it is, you don't need to write it in the exam. As it is, you don't need to write it in the exam. For example, they asked you, how do you verify? They asked you, how do you verify rents paid? They asked you, how do you verify rents received? So if you close your eyes and if you can imagine, Schedule 3 format is there, no? In accounts, you might have studied Schedule 3 format. Schedule 3, Division 1, Part 1, Part 2. So in Part 1, balance sheet pro forma is there. So if you close your eyes and if you remember, share capital, reserves and surplus. And under that again, there are so many other items also. Monies received against share warrants. Then share application money received. Then non-current assets, non-current liabilities. Then current liabilities. Under non-current liabilities, how many line items will be there? Under current liabilities, how many line items will be there? For everything, there are disclosure requirements. For example, trade receivables. trade payables, trade receivables, 6 months and beyond, or if you open proper schedule 3 annexer, which is given in your group 1 chapter 4 unit 1, in that after unit 1 unit 2 they have given one annexer. If you open the annexer, they have given around 29-30 pages of explanation, general instructions and explanation. So how cash is to be disclosed, how this trade payables is to be disclosed, how trade receivables is to be disclosed. So 0 to 30 days aging schedule, 30 to 90 days, like that aging schedule is there. And in case of trade payables, there are so many disclosure requirements. One is payable to MSME, small and medium scale, micro, small, medium scale enterprises, and payable to others, like that. So basically, schedule 3 pro forma, schedule 3 presentation, schedule 3 disclosure should be kept in mind in all the questions, because audit of items of financial statements is what we are studying. Items of financial statements are governed by schedule 3 requirements. So in every question, essentially that schedule 3 element will come. One line will be there in every question, whatever it is. Whatever the question asked is from this chapter, in every question, schedule 3 disclosure will come. Presentation and disclosure. And I told you that there is a good news. The good news is visualization works. Visualization. For example, they asked you, how do you verify inventory? They asked you, how do you verify inventory? First thing you need to keep in your mind is assertions. Do you remember assertions? What is the meaning of assertion? What are the auditor's assertions? Guys, do you remember anything we have discussed about assertions? Completeness, legality, rights and obligations, valuation. These are assertions. So in case of transactions, occurrence. In case of assets, existence. In case of liability, obligations. In case of an asset, rights, valuation, amortization, cut-off procedures. You remember all these words? Hello, say yes in the chat box if you remember all these words. So your whole answer is governed by these words. Your whole answer involves only these words. And you can use your own language. You can frame your own sentences. Not necessary that you need to copy paste answers given in ICI study material. Visualization works even without by hearting or even without reading ICI material back to back time and again. Also you can write answer happily. For example, let us see. For example, Chitra, can you say hi in the chat box, ma? No, I am sorry. I mean in the mic.
Hi, sir.
Hi, Chitra. How are you?
Good, sir.
Good.
How about sir?
Yeah, I'm also good. So we are doing only one sampling, okay? Just one experiment we are doing. I have not started first letter of the chapter also. I have not started first letter of the chapter also. But still, in general, you are conducting audit. Okay, you are doing articles and you are conducting audit. You went to one client's place. Your client received rent, ma. In financial statements, rent received. In financial statements, rent received. 1 lakh rupees is there. How will you verify? Just discussion. Guys, anyone in the class, if you get any valid point, you can just type in the chat box. I'll read it out. You can just type it in the chat box. Rents received. How will you verify rents received? So can you tell me a few points? And remember, if you write 4 or 5 valid points, it is enough. If you write 4 or 5 valid points, it is enough. If you are conservative, 6 points. If you can visualize and write 6 valid points, not simply, pumping up and filling the lines. 6 valid points, it is enough. So point number 1. So Shweta started rental agreement. Okay, rental agreement. Chitra is saying bank statement verification, whether it is accurate. Okay, Lokesh is saying whether it is accurate. Chitra, tell me first thing, ma. Rents received, is it counterfile of invoice? Counterfile of invoice will not call because for rents received, Rajat, there will be no invoice. There will be no invoice. What we verify is rental receipt given by the owner. Rental receipt given by the owner. Okay. So now first, tell me first point, ma Chitra.
The first point we will do rental agreement.
Verify rental agreement. So this is side heading. Okay. Verify rental agreement or rental agreement. This is side heading. Under that you will write one good sentence. One good sentence. The auditor has to obtain a rental agreement entered into by the client and the tenant. Scrutinize, inspect thoroughly to understand various terms and conditions. The auditor has to note down the rent amount, advance rents received, deposit received. So you understand? So can you write this one para? Guys, all of you, please let me know. Can you write this one para? Whatever I told, can you write this one para under this rental agreement? That's all. So one valid point is over. One valid point is over. Now you tell me second point now.
Verification of bank statement, whether it is accurate or not, whether we have received it or not.
Okay, verify. So this is here what you are verifying? Legality. Here you are verifying occurrence or existence. Occurrence or existence. Whether rents have actually been received. Okay, so the auditor has to verify rent receipts issued to tenant and bank statement. Rent receipts. So, for example, if you are a tenant in my house, per month you need to pay 25,000. So you will pay 25,000. Either that you will transfer to the bank account or you will pay in cash. Now I have to prepare a pro forma rent receipt and I need to give it to you. If you are a household, you might not ask for the rental receipt. But if you are a business, you are running business, then definitely for accounting purpose you will ask rent receipt. No, you will go to the owner, you will say, sir, amount is transferred 25,000, can you give rent receipt? Because your auditor will ask, your accountant will ask. If you are running business, you will ask for rent receipt. Verify rent receipts issued to tenant. Verify bank statement. This is second item. So any other item, what you will verify? Next one.
Verification of journal entry in the books.
Very good. Books of account. Recognizing or recording the income. Verify appropriate books of account. Verify rent ledger. Verify rental income register. So register can be there, receipts can be there, cash book, bank statement, all these things have to be verified. Books of account. Okay, next. So this is recording. Then next. Any other item?
That's all, sir.
That's all. Hello, for 4 marks you will get 2 marks. Not that's all. We have to do more.
I have to ask our friends whether some points are there.
Valuation. Valuation means whether correct amount is recognized. Because if you receive any rental advance or March month rent will be received in April, that should be included, no? Prepaid rents, outstanding rents, cut-off procedures you need to apply. So whether correctly recognized, accounting, whether accounting standard 9, revenue recognition, whether you have complied with accounting standard 9. Because this is use of enterprise resources by others, no? Yielding income. Accounting standard 9. So if you receive any rental deposit, 3 months deposit, 6 months deposits in commercial organizations, 1 year deposit will be there. That should not be recognized as income, no? That should be kept in liability account. You understand? You are giving building on rent to some other person. You will receive rental deposit, no? 1 year deposit, 6 months deposit. That should be shown as a liability. That you have to write. Okay, disclosure. Disclosure, schedule 3. Other income. Whether it is shown as other income as per schedule 3. Then other points. For example, TDS. In case if TDS is applicable, in case if GST is applicable, the auditor has to verify the calculation, that is accuracy. That's all. So if you follow this kind of visualization and thought process, the whole chapter is over. The whole chapter is over. For example, we'll see one more thing. Land and buildings. Ayappa, turn the mic on and say hi, ma.
Hi, sir.
Hi. Tell me, how will you verify land and buildings? 5 marks question. You have to tell me the answer.
Sir, legal documents.
First, the auditor shall obtain list of land and buildings owned by the entity.
Title deeds.
No. It is a list. Land and buildings owned by entity. See, for example, you are conducting audit of a big enterprise, they might have got 100 lands and 200 buildings. Who knows?
Yes, sir.
You are conducting audit of SBI. How many buildings SBI will have? How many lands SBI will have? You are conducting audit of Reliance. Half of the India belongs to them only, no? You are conducting audit of ITC. How many godowns they have?
Yes.
So you need to obtain a list. First, obtain a list. This is point number 1. Point number 2. Tell me. Always remember one thing, okay? Try to step one, always in your answer, step 1, try to explain what the item is and its nature. What the item is and its nature. Always, in every question, first one should be, this is so and so. For example, in case of land and buildings, Pavan sir, what can I tell Pavan sir? Simple. Land is a non-depreciable asset. Building is a depreciable asset. So that should be your first point.
Yes, sir.
Okay. Land is a non-depreciable asset, whereas building is a depreciable asset. Okay. Now what will you do? Verify fixed asset register. Correct? Verify fixed asset register. So every company has to maintain some statutory registers. For fixed assets, there should be register. So ask them, give fixed asset register. Open fixed asset register, and the auditor shall examine the fixed asset register, noting down the nature of the asset, the location of the asset, the uses of the asset, the value of the asset, quantity, okay, condition, etc. All these things you need to verify. Condition, you will do physical verification. Quantity, you will verify in books also. So verify fixed asset register. This is one point. So far we have done 1, 2, 3. 3 points we have done. 1, 2, 3. Then tell me more.
Verify whether municipal taxes has been paid promptly.
Very good. In case, in property taxes.
Yes, sir.
So property taxes. But before that, title deeds.
Yes, sir. Title deeds.
Whether title deeds are in the name of client or not.
Client or not.
Okay, if title deeds are not there in the name of the client, it will be leasehold property. Okay, then you will verify encumbrance. Means mortgage. If you have put this land and building for some bank security and you have taken loan, that is mortgage. Encumbrances are to be verified. Then any other point?
Depreciations.
Depreciation.
Visibility.
Depreciation on buildings, correct. Verify depreciation, the method of depreciation, and the rate of depreciation, whether accounting policies are continuously followed.
Any revenue expenditure has been debited to profit and loss account.
Excellent. Revenue repairs versus capital repairs.
Capital repairs
are to be capitalized. Repairs of capital nature should be included in the value of the asset, whereas revenue repairs are to be expensed to P&L. Excellent point. Very good. Next, any other point? Any other point? Additions and Deletions during the year.
Yes.
Any lands sold during the year, any lands bought during the year. If you have sold land, there can be profit on sale of land. If you have purchased land, whether incidental expenses are capitalized or no. Correct?
Yes, sir.
Then next. Any other item? Disclosure. Whether it is properly disclosed under property, plant and equipment, whether land and buildings are separately disclosed, whether owned properties and freehold properties and leasehold properties are separately disclosed.
Yes.
Okay, then valuation. Right disclosure last. Okay, disclosure should be last point. First point, explain the nature of the item, definition or meaning. For example, how do you verify intangible asset? First, you'll write intangible asset definition. Intangible assets are the assets without physical substance. Intangible assets are governed by accounting standard 26. So like that, first you'll write the meaning of intangible asset. Intangible assets are non-monetary assets. Like that you'll write.
Yes.
Non-monetary assets without physical substance. So last one will be disclosure. First one will be explain the nature of the item. So basically what you need to do, remember these shortcuts. What accounting record will be there for this? What accounting should be done? What legal documents will be available? What legal provisions are to be complied with? What accounting standard is to be considered? What disclosure requirement? So if your answer should be around these things. What accounting records will be there? Fixed asset register. That might be memoranda record also. Fixed asset register is actually not accounting record. Okay, in case of purchase or sale of the asset, then it comes to cash book or bank statement. Okay, so these are the items. And wherever appropriate, you can write physical verification also. You can write CARO reporting also. You can write related party transaction also. Okay, if the company has given this land or building on lease to related party transaction, that also should be disclosed. So disclosure requirements. So these your answer should roam around these points. If you start thinking in this line, the whole chapter is over. So we'll try with some more things. So say for example sales. So Rajat, Ayappa, you keep your phone in mute. Rajat, can you say hi in the mic?
Yes, sir.
Hi Rajat, how do you verify sales? Tell me.
Whether the amount has been, what kind of sales it is, like whether the amount has been reflected in the bank statements.
No, you're straight going to step 3 or step 4. First one.
What
Sale of goods and services is the principal revenue generating activity for any enterprise. First, about the transaction, about the item.
Yes, sir.
So you need to follow the rhythm. If you are not following the rhythm, you will miss somewhere. So sale of goods and services is the principal revenue generating activity of the enterprise. The auditor has to obtain an understanding of the primary products and services dealt with by the entity. This helps him in understanding the operating risks, risk of material misstatements, and better planning to cover risk areas. So this kind of introduction, you should develop this vocabulary. So this is the first one. Now tell me the second point.
Check the sales register.
Check whether the entity sells goods on cash or on credit or both. Okay, for cash sales, verify daily cash sales register. For credit sales, verify credit sales ledger along with the ledger of customer in bracket debtor. Are you following the rhythm?
Yes, sir.
So if you write like this, don't you think you will get full marks?
Yes, sir.
That is how you need to develop. Okay, next, what will you verify? Next.
Invoice.
Very good.
Invoices.
Invoice. See, you need to be smart also, okay? On test basis, because it is practically impossible for the auditor to verify all the invoices. On test basis, on selected customer ledger accounts, the auditor has to verify invoices. Okay, because you are saying that it is practically impossible. See, these kind of points, no, you are communicating to the person evaluating your paper that, bro, I have done enough audits in my life and I know the practical exposure. Practically, I am exposed to this. So this point, theoretically, student might not be able to write. But if you have done enough audits, then you might have done sampling only. Do you think, Rajat, in real audit, can you verify all the invoices?
No, sir.
Impossible. If you are doing small company audit, then yes. If you are doing big company audit, then you cannot verify all the invoices. Okay, you are verifying invoice. In invoice, what will you verify?
The invoice number, name of the company.
Very good. Scrutinize. In invoice, the name of the party,
Invoice number.
Date,
amount,
items sold, quantity, rates, discounts, taxes, and the total amount. So in invoice, what you are verifying? To whom it is sold, on what date it is sold, invoice number. Okay, then on every invoice, GST number should be there. GST amount should be collected. If sometimes other taxes, if they are leviable, that also. And sometimes, in invoice, other fees or other amounts collected. For example, freight. So you are sending goods to customer, but you said that, boss, freight is in your account. He said, okay, Anna, no problem. Send, I will pay freight also. So you said 1 lakh rupees goods, 5,000 freight. So that freight should be credited to other income account. It cannot be credited to sale account. No, sale is not 1 lakh 5,000. No, sale is only 1 lakh. 5,000 is freight collected. And there can be another situation also. Sometimes you are sending containers. Container rent also you will collect. Some deposit you will collect. For example, this water tins and all they will supply, no, to officers, 20 liters Bibo water tins they will supply. So then they take deposit, no, 200 rupees, 300 rupees deposit they take for that. In every company, whenever they are sending goods, container cost, they will charge container rents. They have to be treated as other income. If the deposit is returnable, that should be credited to liability account. So you have verified invoices. Next, what will you verify, ma?
Whether the amount in the invoice has been received.
Cash book or bank statement. Verify cash book for collections. Verify bank statement if the customer transferred money through check or online transfer. Next. GST records. Inventory records. The auditor has to verify inventory records. So for every sale, inventory should reduce, no? GST records. Based on the sales, you have to pay this GST records also. And then analytical procedures. Compare current year sales with previous year sales. Compare GST paid with sales amount. trend analysis, all these things you can verify. See how many valid points are coming, and trust me, you don't need to write these many points also. Because for 4 marks or 5 marks, you will not have enough time to write this much. Still, we can write 100 more points also if you want. Still, we can write 100 more points also. Kirti is saying GST returns. Verify GST returns. Verify GST returns. You understand? And then, what is this? Sales returns. Cut-off procedures. Sales at the end of the year. Sales to related parties. Discounts. Okay, defective goods sold. For related parties, board resolutions also required sometimes. You understand? Then finally we end up with Schedule 3 disclosure requirements. Whether sales are properly classified, properly disclosed as per Schedule 3 requirement. That's all. Okay, in case of export sales to foreign countries, accounting standard 11, conversion, valuation. So guys, do you understand these points? And from these points, if they ask how do you verify sales, can you write 10 genuine points or can you write 6 genuine points? Never beat around the bush, okay? So chumma don't write some points, because the person who is evaluating paper is not an idiot, okay? He's a qualified chartered accountant. If you are beating around the bush, no hesitation, simply they'll cross, put to 0. You have to write valid point, but you can use your own language, you can construct your own sentences. Hello, are you understanding? If this question is asked, will you be able to write? Yes. Now Rajat, I am not going to speak anything. You tell me purchases or tell me salaries. You tell me, or you take the help of other students and tell me. I am not going to speak anything about this. Whatever you tell, I will type. So I am only data entry operator now, not lecturer.
Okay, first of all, we'll write about what salary transaction is.
Bolo.
Salaries are monthly fixed payments which are being paid to employees of the company. Employee benefit expenses paid.
Correct. Salaries are employee benefit expenses paid to workers and employees. Employee benefit expenses include salaries,
allowances.
Very good, allowances. No, so basic salary. So you can write basic salary.
The traveling allowances.
Allowances. If you write, expand that allowances, 100 allowances will come. City compensatory allowance, house rent allowance, dearness allowance, corona allowance, work from home allowance. That is not required. Allowances.
Yes, sir.
Then
perquisites.
Bonuses, performance linked bonus or otherwise. Then PF USA and others.
Then check the agreement with the employees regarding how much salary they are being paid.
Check appointment letters on sample basis. So whether this employee is a real employee or fictitious employee.
Yes.
So you need to verify that also.
Check the attendance. Mustard roll.
Attendance. Mustard roll, yes.
Then check the statements as to appropriate amount of salary has been.
Statements of calculation. Accuracy. Yeah, how it is calculated. Okay, whether any deductions are deducted properly. It could be TDS, it could be professional tax, it could be PF USA. So many deductions will be there. So the auditor has to verify deductions. So verify payroll. Payrolls you need to verify.
Yes, sir.
Then
salary stubs which is signed by the employees.
Yes. Payroll register. or vouchers signed by employees. Next, bonuses, compensation, payrolls. Correct. Everybody, whatever you are telling in the chat box, they are right points. Then anything else? Tell me analytical procedures. What analytical procedures you can follow here?
Yeah, the salary in the previous year.
Salaries paid for the current year and previous year can be compared. If there is any undue variation, if current year salaries are too high or too low compared to previous year salaries, you have to ask the explanations. Management has to explain. Next.
Salary for different positions of employees.
Average salary per employee or per worker.
Yes. Any outstanding salaries.
Then categories. Categories. You know, salary paid to office employees, salary paid to showroom staff, salaries paid to productive, laborer, wages, director's remuneration. That categories you need to verify. Then outstanding at the end of year.
Yes, sir.
Whether outstanding entry is properly passed at the end of the year or no. Then TDS collections, correct. Salary adjustments in case of theft, correct. Salary adjustments in case of advances given. If the company has given any advance or some companies will give a housing loan kind of things also to employees. Then you need to check the calculations. Advances given to employees, loans given to employees. OT, overtime, whether overtime is properly authorized or no.
26 AS.
Yeah, 26 AS. On sample basis, you can verify if you want. How many points are there? How many points? Still so many points can be written. For example, salaries paid to project engineers in case of construction company or in case of any company towards commissioning of plants or construction of buildings is to be capitalized. Wages paid to workers for construction of assets are to be capitalized. That point you can write. Then compliance with accounting standard 15. That point you can write. Then legal registers, whether PFs are paid properly, ESI paid properly, gratuity provision created properly, pensions paid properly. Correct?
Yes, sir.
Then see how many points are coming. It is just about your visualization, brainstorming, and you need to nurture yourself to a level where, if something is given, you need to think about it and you must be in a position to write something. Okay, so if you practice like this, that's it. That is the end of chapter. You understand? Now, sir, is it relevant to check from which source the firm finances to provide salaries to employees? No, ma. Normally, we don't check that. For salaries, it is operating expense. No, from working capital they'll pay or from operations they'll pay. Okay, so you don't need to verify funding. What is the source of funding for this? You need not verify. That is altogether a different point. In salaries, you need not write that. Okay, as per Schedule 3, whether it is properly disclosed or no, productive wages, then salaries, director remuneration, if there is any legal, minimum payment of wages are there or any legal allowances are to be given, that you can verify. PF, ESI, those things you have to verify. That's all. So we'll go to our beautiful ICI material. So try to understand. We will not read, if say for example 40 questions are there, we'll not read 40 questions, because even in regular batch or whether it is a crash batch or revision batch or whether it is 1 year batch also, no one can explain all the 114 pages to you. No one will explain. Even if he explains also, that is waste of time. So he is wasting. If the lecturer is trying to explain 114 pages, he is spoiling the quality of time. He is spoiling the quality of time. That's all. So it is not required. First, we need to understand assertions. Guys, do you remember assertions? Now, what is meaning of assertion? I have already explained this. I remember I have already explained this. One more time I am explaining you. Say for example, Say for example, factory building 10 crores. This is in a balance sheet. In the balance sheet of the company, factory building 10 crores is there. Debtors 10 crores is there. Building 10 crores is there. Land 5 crores is there. So in P&L by sales 150 crores is there. So when you look at this, what are the assertions? Assertions are directly or indirectly what management wants to communicate or what management is communicating. So what is assertion? Assertion is something directly or indirectly what management is communicating. So can I say by including factory building in balance sheet, management is communicating A, the factory is owned by the company. Directly or indirectly, you are saying that I am the owner of this. The recoverable value of the asset is minimum 10 crores. The recoverable value of the asset is minimum 10 crores. See that the building is used for business purpose. You understand? So directly or indirectly what management is saying, on the date of balance sheet, the company has rights on the asset. Or E, depreciation or other allowances like write-offs or capitalizations, depreciation or other allowances on asset are properly made, that the company has absolute control over the asset. If you do not have control over the asset, that is not your asset, because asset is a resource which the entity can control. Asset is a resource which the entity controls, which the entity has absolute control on it. If the control is not there, it is not your asset. That's all. These are called assertions. Now the question is, the factory is owned by company. Proof. Document though. Recoverable value is minimum 10 crores. Show how you calculated the recoverable value. So recoverable value, that point you do not know at CA intermediate level. In CA final level, there is something called impairment loss. In that accounting standard, when you are calculating impairment loss and all, then you speak about the recoverable value. For you, it is factory building 10 crores means if you sell the asset, more or less 10 crores should come. Okay, then the building is used for business purpose. So the auditor has to verify. If it is intangible asset, say for example, designs, drawings, molds, softwares. So the auditor will go and verify, are you using software? Yes sir. Which software you are using? Sir, XYZ software. For what you are using? Sir, for billing purpose sir. Show me. So go to the billing section and see whether the software is being used properly or no. You have to do that. The auditor has to do that. That is mandatory. So you have to see the building, whether the building is used for business purpose or no. Okay, the building can be given as a staff quarter also. That is also business purpose only. The building can be used for manufacturing. That is also business purpose. The building is used as a corporate office. That is also business purpose. The building is used as a showroom, go down, whatever it is, whether it is used for business purpose. On the date of balance sheet, whether the company has rights on the asset. Say for example, on 30th, if the company sold the asset, on 31st, you should not include that in your balance sheet now. Then depreciation and all, this is valuation. This is valuation. Then the company has absolute control over the asset, satisfying the definition. Then you can write down about future economic benefits also, recognition, all these things you can write. Measurement. You understand? So, Rajat, read this ma. Definition of assertion.
It referred to the representations made by management, explicit or otherwise, that are embodied in the financial statements, as used by the auditor to consider the different types of potential misstatements that may occur.
So, representations by management, either explicit, openly, or implicit, otherwise. that are embodied in financial statements as used by the auditor to consider potential misstatements that may occur. So can a misstatement occur in completeness? Can a misstatement occur in type of omission? Can a misstatement occur in valuation? Can a misstatement occur in legality? Can a misstatement occur in occurrence or existence? Can a misstatement occur with rights and obligations? So these are the simulations the auditor has to ask. So assertions regarding completeness, cutoff, existence, occurrence, valuation, measurement, rights, obligations, presentation, disclosure of 5 elements. How many elements are there? 5 elements are there. Asset, liability, equity, income, expense. Assets, liabilities, equity is balance sheet, income and expenses P&L. And disclosure of all the items as per accounting standard and as per schedule 3. You understand? So they have given one example, okay, building. So the company's owner, the company's management has shown building for 50 lakhs. What is the meaning? The meaning is, just now we have studied, no? Same thing they are telling. So read this, ma.
If company X balance sheet shows building with carrying amount of 50 lakh, the auditor shall assume that the management has claimed or asserted that the building recognized in the balance sheet exists at the period end existence assertion. Company X owns and controls such buildings, rights and obligations assertion. The building has been valued accurately in accordance with the measurement principles valuation assertion. All buildings owned and controlled by Company X are included within the carrying amount of 50 lakh completeness assertion.
So don't you think we have discussed all these things, ma? Are you following the flow? Hello, yes. Are you following the flow? Very good, correct. So here, income statement captions comprising revenue and expenses. Do you remember when I explained you assertions in second chapter or third chapter, we have discussed about assertions. I have given you one chart in case of transactions, assertions. In case of account balances, assertions. Do you remember? Hello? So same thing. So for income statement captions, that means the line items that fall in income statement. The line items that fall in income statement. Occurrence, whether the transaction is occurred, has occurred. Transactions recognized in the financial statements have occurred and relate to the entity. This is the assertion. This is the explanation of the assertion. So first one is occurrence. Second one is completeness. All transactions that were supposed to be recorded have been recognized in the financial statements. Transactions have not been omitted. Cut off, that means correct accounting period, whether all income and expenses in the correct accounting period. Cut off is a separate assertion because the substantive procedures to verify it are typically different from those applied to the other components of completeness. Cut off procedures they're asking about measurement, presentation and disclosure. That's all. You remember this, Khatam? So trust me, you by heart this para. You by heart this para. This para means these 2 pages. Page number 3, page number 4. All income and expenses are over. You don't need to read all the incomes and expenses. You by heart this particular table and you have to write this. Any item that is given in the exam, it could be purchases, it could be sales, it could be purchase returns, it could be sales returns, it could be carriage in, it could be freight, it could be advertisement, it could be rents paid, it could be taxes, it could be provisions, anything that comes in income statement. It could be other income, it could be interest expense, it could be depreciation, amortization, it could be, by dividends received. So whatever it is, first you need to write this. And you can write it like this. First I told you, whatever it is, you need to explain, whether it is sales, whether it is employee benefit cost, you explain it. Then you write sales items being transactions, the auditor has to apply audit procedures for tests of transactions. The audit assertions include occurrence, completeness, cut off, measurement, presentation and disclosure. Then put this heading, occurrence, put the heading. Write down 1 point below that. Whether the sale transactions have actually been occurred, goods have actually been delivered. Then completeness. whether all the transactions are properly included without any omission. So like that, you will put the heading and you will write one para. Enough. That's all. To make your life simple, I have given one short notes. Now look here. There, see, for example, here, look here. So we'll come to balance sheet after some time. So we'll take some examples. See, you are reading share capital, okay? Where it is in page number 7. Share capital is in page number 7. Okay. So look at this. What they are trying to tell. What the hell this is? Form SH7 for increase in authorized share capital. How much of information they are giving Ministry of Corporate Affairs, resident shareholders, non-resident shareholders, shares issued at premium, application of security premium account, 8, 9, 10. See the pages, 11. 12. 13. 14. 15. 16. Aha. So from 7th page to 16th page, that means 10 pages. 10 pages in typed, printed page. Guys, tell me one thing. Do you think practically any student, even All India first ranker, do you think he can write that answer? No way. No way. Sales also same. 10 pages they'll give. 5 pages, 10 pages. So, to make your life simple, I will give small answers. Say for example, purchase of goods. There 4 pages. Here 3 ABC. So you put little masala to these 3 points. Enough. Because honestly, you cannot write more. You will not have enough time to write more. So trimmed. I have trimmed and I have given answers like this. Transactions with related party. One table. Khatam. Then see, remuneration paid to directors. You open that remuneration paid to directors, 4 pages. Here, refer the resolution of general meeting or the board meeting for appointment and terms of appointment of director, point number 1. Check the agreement with the director, point number 2. Verify director's attendance in board meetings, point number 3. To verify whether he is actually director or no, whether he is attending to director meeting or no. 4. Ensure compliance with the following provisions. So this is, you remember that, schedule 5 is there, 197, calculation of profit and all, limits on that. So that sections will write. Check the computation. Katam, see the size of the answer, this. So guys, tell me one thing. Do you think more than this can be written for 4 marks? More than this is required to be written for 4 marks or 5 marks? No, this is maximum. But in this, you don't try to edit again. If I have edited something, student is also creative, no? He will edit more. So payment for acquisition of assets. See the size of my answer. That's all. Trim. Payments controlled under the Companies Act, like managerial remunerations, etc. Share transfer expenses, preliminary expenses, blah blah blah. Assets acquired on lease, payment of expenses, payment of income tax. So just on sample basis, we'll read something. So Shweta, can you read payment of expenses, ma?
Yes, sir.
Shweta, from where you will read? From ICA material or this material?
Sir, this only, sir. ICA means I will write exam only in next generation, sir.
Next generation. So what you do is, ICA material, read that first 2 pages.
Okay, sir.
Thoroughly you need to read that first 2 pages. Then visualization, then short notes. Enough. See, It is not short notes, okay? Even in my book also, vouching verification put together runs into 35-40 pages.
Yes, sir.
Okay, but 30 pages is far better than 114 pages now.
Yes, sir.
Read payment of expenses once.
Payment of expenses. Ensure that every item of expenditure has to be written off in the year in which it is incurred.
Expense, to be expensed. To be written off means to be expensed. Next.
If the provision for outstanding expenses made in a past year turns out to be insufficient and the amount is material, proper disclosure of such a fact should be made in the accounts of the year in which any further amount is charged on that account.
That means previous year expense you are paying in the current year. You need to show it separately. Okay, next.
Ensure that no personal expenses are charged to the business.
This is given in our Companies Act also. Next.
In the case of a company, personal expenses if charged have to be reported, particularly those which are not covered by commercial practices or contractual obligation. Ensure that where any part of an item of expenses relates to a period that extends beyond the close of the year, a proportionate amount thereof has been adjusted as prepaid expense.
That's all. Next.
Check the genuineness of the transaction by comparing it from the details of supporting vouchers like bills or invoices, etc.
That's all. So guys, tell me, payment of expenses, do you understand this 5-6 points, whatever are there? So this is a wholesale question. What is wholesale question? How do you verify payment of expenses? Wholesale question. How do you verify payment made towards royalty to technology provider? That is a retail question. This is a wholesale question. So they're asking about a class. They are not asking about a transaction. They are not asking about one particular item. They are asking about a category. So in the chat box, guys, please let me know when you read this 15th question, are you confident enough that you can write this kind of answers? Are you understanding it? In the chat box, please tell me. Rajat is saying yes, Arun is saying yes, Chitra is saying yes. This is how this chapter is to be done. This is the only way this chapter is to be studied. Otherwise, you will get mental.
So this chapter and special audit, both the chapters are
like this only.
Yes, sir. Very long, sir.
Yeah, there. See, actually, that special audits and all is there, no? The whole chapter itself is not required. In that, only required part is government audit. See, how do you verify audit of a cinema hall? How do you verify audit of a hotel? So, specifically need not be taught. You understand? If you have 200 types of entities, you don't need to learn 200 types of audits. Bank audit, yes, we understand that is separately to be taught. PSU audit, yes, that is separately to be taught. Because their objectives are different. Audit of government, yes, separately to be taught. After that, audit of club, how will you verify audit of a school, educational institution, amusement park? Seriously. Audit of a leasing company. All these things not required. For that also, I'll give you one pro forma, okay? For that, I'll give you one pro forma. You follow that pro forma, enough. Any special audit, I'm telling you, 6 steps. Any special audit, 6 steps. Preliminary, verify the objectives, verify the memorandum of association, articles of association, verify the bylaws of constitution, verify the objectives for which the entity is incorporated, verify what is the legal structure of the entity. Is it a company? Is it a society? Is it a trust? Is it a proprietary concern? Is it a partnership firm? Verify bylaws governing the entity. This is point number 1. Special audits we are discussing. Point number 2. Governance, management, administration. The auditor has to verify bylaws which govern the internal management of the company. For example, articles of association. In case of society, bylaws. The auditor has to note down what are various financial, administrative and other controls, limitations placed on the governance body. The auditor has to verify the organization structure, whether the management is done by management committee or board of trustees or board of directors or managing partners, etc. This is second. Third one, audit of revenue items, audit of revenue. 4, audit of expenses. 5, audit of assets. 6, audit of liabilities. Kata. Any audit other than government audit, okay? Government audit, local body audit, we have to learn thoroughly. After that, any other audit, you will follow only this pro forma. Any examination question comes, fit in the pro forma, and trust me, you will get full marks. It is not that we are, escaping or running away. No, 100% full marks you will get. But you need to write certain specific points. Say, for example, if it is hospital. So you need to write some customized points. In hospital, what customized points will be there? Verify inpatients register. Verify the surgical apparatus and operating equipment purchased. Verify the consumption of medicines. Like this, some, relevant points you will write. Verify income from operation theatre. Verify income from pathology lab. Verify income from consultation. Verify income from OP. Verify income from casualty. Verify income from physiotherapy. Verify income from so and so. Verify income from sale of medicines. Verify income from canteen. So these are customized. Like that, if you write, more than enough. So you really no need to break your head for that and all. So traveling expenses. Can you read this, ma?
Traveling expenses. Check whether traveling expenses payable to staff or according to rules approved by authorized personnel. Examine whether the travel expenses incurred by the directors are for the objectives of the business. Explain the following particulars in the tickets. Details of the journey, amount of railway or airfare.
So after this, if you want to write, you can write 10 points also. After this, if you want to continue, you can continue. Okay, now salaries and wages. This is very important. See, salaries and wages, I have given you 4 points. You open ICI study material, you will read 200 points. Salaries, important. Petty cash, advertisement expenses, payment of dividends, this is important. Retirement gratuity to employees. So, if you have enough time, read ICI material once. But once reading 114 pages is also actually a headache. But I suggest you, if you have enough time, if you are writing in this December, you might not have enough time to do that. But if you are having enough time, if you are writing exam in next 2022 May or 2022 November, then you read ICI study material once, like a novel. You'll understand the overall picture. Then you read from this. It is enough. But in ICI material, that first 2 pages boxes are there, no assertions by heart. Again, I am telling you, you just need to remember everything in your mind. That's all. So rental receipts. We have discussed something about rental receipts, no? So can you read this, ma? Rental receipts.
Rental receipts. Examine the rental agreement. Ensure that the rent receivable has been included in the current year income. Check whether proper adjustment entries are passed for the rent receivable during the year. The amounts collected from tenants on account of rent should be checked by reference to receipts issued to them. Ensure that there is adequate disclosure of advance rent received, rent deposit, and the rent receivable in the financial statements of the entity.
That's all. Khatam. 5 points. So usually, if you see, you have observed me, you are with me, throughout the batch. I am a person, I am a lecturer who wants the student to read a lot. I never trim, but a person like me, myself trimmed this chapter to this level. You can understand how unnecessary it is. So normally I will not do this. In other topics, if you see, we'll do copy paste of ICI material. So we'll read maximum. But here it is waste of your effort and time. It is not worth reading that much. That is the reason trim. Bankruptcy, dividend, sale of investments. So, bankruptcy. What is the meaning of bankruptcy dividend, ma? Hello, madam.
Sir, no idea.
Remaining people, hello. Can someone tell me what is the meaning of bankruptcy dividend? Means you sold goods to one guy or you have given loan to one guy. He turned to be bankrupt. So his business will be liquidated or assets and liabilities will be taken by liquidator or official receiver, no? Then in proportion, the liquidator or official receiver will clear all the debts. In that your name also will come. But you might not have received full amount because he is bankrupt. So he has to pay 1 lakh rupees to you, but official receiver wrote a letter to you. Dear Shweta, so and so person has to pay 1 lakh rupees to you as per the financial statements. He has become bankrupt and I have attached all his property. Excuse me, I have attached all the property, I sold it and I am clearing it as per law. For your 1 lakh rupees you are getting 42,000. This is in full and final settlement. That money you are receiving is called bankruptcy dividend. Hello, understand?
Yes, sir.
Guys, do you understand what is bankruptcy dividend? So before receiving bankruptcy dividend, logically you might have written off that debtor as bad debt, isn't it? See, liquidation happens after so much of, after passes of time. But the moment you have given loan or you have sold goods, within 1 month he is not repaying, so obviously you will write off a bad debt. After 2-3 years that money will come, so you will write it as other income. That's all. Read more.
Bankruptcy dividends. Examine the correspondence with the official receiver or assignee to ascertain whether the company has proved the existence of the debt and the amount thereof. Verify whether the amount receivable has been written off earlier and has been included in bad debts. Verify whether amount received has been noted in the file. Ascertain that any specific matter materially affecting the accounts has been noted in the file.
A separate file. There is no name to this file. That means you are keeping a separate record for this kind of dividends. Next.
Trace the receipt of amount in the bank statement.
So the official receiver said you will get 42,000, no? So verify bank statement whether that 42,000 came or no. That's all. You understand? So shall we take a small break and come back? Guys, shall we take a small break and come back?